Good afternoon. This is Tom Alexander. It is Sunday, October 8th. It is currently 11:32 a.m. Eastern Time in beautiful Charleston, South Carolina. This is the weekly video addendum to the written report that you can find on the website under Weekend Updates, alexandertrading.com. If you find value in this, please like it, please subscribe. All of those things are very helpful, helping to grow the channel, and I would very much appreciate it. Okay, so last week we may have put in an important intermediate term low. The market is always an if-then proposition, but we do have some pretty good parameters to help us. And let me just get into the charts here. Okay, that's the best way to do this. Okay, I'm going to start with the SPX. Now, Friday was a wide range update in all four of the U.S. primary trading indices. We also are coming off of a technical condition as measured by NYSE data of somewhat of a downside extreme, not super extreme, but somewhat. And if you'll go to the website, you can look at recent posts regarding that. I posted several things last week regarding breadth and the levels of breadth and previous lows when breadth reached those levels over the past couple of years. And so last week we did reach a level from where you begin to be alert for the potential for an intermediate term low. Then we had Friday's wide range update in all four of the indices, which goes on the bullish side of the ledger. Now what we want to watch for, we should see immediate strength next week, hopefully in Globex. Hopefully Globex will gap up. Now, you always want to know if you have a working assumption, that's fine. If you're bullish or you're bearish, that's fine. But you always have to know what invalidates that idea. So the present bullish assumption that I'm carrying comes into question if all four of the indices retrace more than 50% of Friday's range. It totally invalidates a bullish assumption if we close below Friday's low. Now, barring either of those two things, then we could have some digestion in here. As long as it doesn't retrace deeply into Friday's range, that's okay. Another thing that should happen early next week is we should see breadth expansion. I think NYSE, and I put this in the written report, I think NYSE breadth, and we'll take a look in just a minute at the chart, but I think NYSE breadth closed at plus 760 or something on Friday. We should see a very, very healthy, robust breadth expansion at some point if this rally has legs, plus 17, 1800 or greater. And that really is something we need. We need to see that pretty soon. The levels I have highlighted on the charts that are in the written report, you can find that on the website, alexandertrading.com. You can find all the charts. Also, you can download a PDF that will give you the charts if you're interested. But bottom line is the 50% retracement level and then Friday's low and all of the indices are the levels we want to keep an eye on next week. Now, to the upside, gets a little bit more nebulous, but again, if we put an intermediate term low, what you expect to see is especially the close key reference areas to the upside, the close levels to the upside should get blown through to the upside. And so again, all of these levels, the Russell, the NASDAQ, the SPX, and the Dow are in the written report. You can access a PDF or you can just look on the website under weekend report for this date. And you'll see these levels and you can peruse that at your leisure. Okay, another interesting thing to keep an eye on here is the progression of the auction. Now, this is something I've been talking about. I talk about every week, and an auction is an ongoing event that cannot be entirely constrained by time. And it appears that we've broken out of the third quarter auction, and now we're in a new distribution. Distribution is an auction, is a quote unquote market profile auction market term for a range. And so we'll see if the range upper extreme and lower extreme have been set. This is the potential upper and lower extreme. It's very early. We shall see, but it's fun to follow. And you will be amazed at the consistency of the steps of development if you follow the auction this way. Okay, let's take a look at the technicals. And this is what I have highlighted here, these dates and these levels. Is when breadth had 10-day moving average of breadth reached this downside extreme that we saw last week. And in every single instance, we were close time-wise and really price-wise to a low. Now, that doesn't mean necessarily that we don't come down and make a lower low. But if we do make that lower low, then once again, we'll be looking for signals of what's going on. At this point, my working assumption is a low is in place. And if you go back and you look at the times that we have reached the 10-day moving average near the levels we saw last week, we're very close to a low. Now, there's an exception to that, and it's important to note that there's always an exception. We reached this level in 2020 on 2/27/2020, and we went about 27% lower before we got the bungee jump. Now, it's not quite that simple. There were screaming rallies from this point all the way down, and I'm not going to go through that. I've done that in the past, but I always like to show you cannot lean entirely on any one thing. We're dealing in probabilities here. You never bet the farm on any single event, any single indicator, any single market pattern, because you're trading real money, and whether or not you make money depends as much on your facility with trading, your money management, as it does analysis. And that's just the reality of trading. Guys, I hope you found value in this. I will continue to update. Next week is going to be, as usual, a very interesting week. Enjoy the rest of your day, the rest of your weekend, and I'll speak with you again soon.